So in today's video, we're gonna go over how to mark up your charts. I got a lot of comments, I got a lot of questions in my DMs. People asking me, hey, I get the strategy, but I don't know how to mark up my charts. So today I'm gonna try to explain it as simple as I can. And I'm gonna show you the examples, including the today's trade recap. And stick around at the end. I have something that you might be interested in looking into. So it's pretty simple. If it's a buy model, so imagine this is an hourly candle. If the price creates this type of move, let's say you see something like this in the 5 minute or on the 1 minute, and your hourly, this is your previous hour, this is your POI, this is how we mark up the charts, and the price may come down here, start going up, or the price might come all the way down here and then start going up. This one called internal liquidity, and that's why I put it LS for liquidity sweep. Another thing I've seen lots of people, let's say there's a liquidity in this area. People want to take this one and then go towards the internal. First of all, that's not guaranteed. Second, it's very risky. It's because you're going against the overall trend. So the way I like to do it, I like to mark my POI. I like to mark my liquidity sweeps. If you're familiar with the ICT stuff, he calls it liquidity sweep. Liquidity sweep is pretty much resting orders. That's what any liquidity is, just resting institutional orders. You can also call it, if you've been around for a couple of years, you'll understand a concept called turtle soup. It can also be a turtle soup. Price sometimes goes below the POI, goes in towards, grabs all the internal liquidity, and starts going back up again. So that way you have two scenarios. The price can do this and then start going back up again, or the price can come down and sweep this low and then starts going back up. You get the idea. Same goes the other way around. So if the price come down and then the price may come down to POI and start continuing, or goes in and sweep the internal low, the internal high, and then continues. So I'm gonna go over the examples on the chart from today's trade so you kind of see what I'm talking about. So in today's trade on the gold, so what I was saying, I saw this, and what I was looking at, sometimes I look at the volume order. If I see the volume order is bigger than the previous, if you're going on an uptrend, if on the uptrend these two candles have a very massive volume orders, I know we're gonna continue. But if the overall trend is upwards and the red candles have low volume, then I know it's just a normal correction. It's a little piece of nuggets. So the way I do it, I put it here. Let's say this candle closes around here. I know the overall trend is going upwards. So we can call this one liquidity sweep. We're going to call this one our POI. And I can see if it matches with something on the left side. So it kind of matches it with that area. So that's how I do it. Let's see. This was perfect. So you can either take this one. So this is what I mean by when I say internal liquidity sweep. When you see the overall price is going up, you can mark multiple areas. Mark here. Let's say this is the overnight swings. These are the overnight swings. The price going up. And we can see the price coming down. Every time coming down to a certain area, you see that swing. So think of it this way. Every time a price creates a support, that support in the future becomes a resistance, and vice versa. If it creates a resistance towards going downward, on the way up for the correction, it acts as a resistance. Hopefully that was helpful for those of you who heard of concept of support and resistance. So this is a morning time. It's about 8:30. We come with sweep. So this counts as a internal liquidity. So external would be down here. But since we are on the uptrends, we are not looking to target that area. So we just want the price to sweep some sort of internal and then continues upwards. So this is the buy model. Like that. So, and then you see as soon as the price closes above this sweep, above this area, we know that the price showed us that it likes to go up. So you can just get in here and target this area. Let's say you missed this. The price closed above this POI, and this is also an hourly POI. Let's say the price starts coming down. On the first go, it doesn't really close below it. And then it closed above it, but we don't flip the candles. Then we close below it again, close above it again, and then you can enter somewhere around here, or you can just, if you just want to enter based off candle closure, you can also enter here. And lately I've been paying attention to 15 minutes, and I've been taking a lot of trade based on 15-minute candle closure and 15-second or 30-second yeah, all the entries. I take my entries on 15 and 30-second. It's something new, so I don't recommend doing it. I'm still experimenting on it to see how it goes. That's that. It pretty much close above, close below, and continues. Pretty much indication, correction, continuation, or CCT. That's that. Trying to so hopefully that was helpful. Hopefully I didn't confuse anybody on that one. So if you look at the 15-minute, let's say you're around here. It's around 9 a.m., 9:30 a.m. You just woke up. You're getting on the chart. You see that the overnight we've been going up, and then now we're about to continue to go up. So you can do this. You can mark up your POIs, and you can also mark up your sweeps. Let's say this area, even though we closed like this, we can just go down to 1 minute. See, it matches it. Usually the 15-minute matches it with the hourly anyway. So you get the same result. But there's more clear way of seeing it. Because if you see price like violently moving up or down, like in a crazy manner, like for example here, if you see the price moving like this without giving you enough a retracement, when you see a massive candle, you go down to 15 minute, and on the 15 minute it has more, it gives you a little bit more options. So if you look at it like this, see, close above this candle, came below it, close above it again, and let's say you mark your chart here. This was one of the trade I actually took when the Asia opened. This was my first trade. Let's say you mark up, you're here on the 15-minute, and then this 15-minute also closes, and you also mark up this area. So you have this area marked up. The price did not give you enough retracement. But you also have this area where we have created a liquidity. The price comes down, close below it, close above it again, and this is where you enter. This is where you enter. You put your stop loss right below here. You can target this low hanging fruit for a nice 1 to 2, and you're done for the day on 81 ticks if you trade with 2 contract. If you trade with 2 contract on the regular gold, that's about 1600. On a micro, I trade around between 5 to 10 micro, so that's about like 800-ish, and you be down for the day. That's that. Hopefully that explanation was helpful. Let me and for those of you asking if it works on crypto or any other commodity, yeah, it works pretty much on anything with volume. I trade mainly NQ, gold, and silver. For example, on silver, there was a couple of good opportunities after the market opened, but I didn't take any of them because I kind of missed taking them. So on a 15-minute, you can see the overall price is bullish. This is our correction. We're going up, and then we're chopping around a little bit. But this is our first candle that we close beyond that previous candle cleanly. So you can mark your chart like this. And you can also mark this chart like this. We can call that one liquidity sweep. We can call these two POIs. Let's say you want to here. Let's say you see this, and then you go down to your 1 minute. If I'm looking at 15 minutes, I usually go a little bit below 1 minute. You don't have to. But what I've noticed, it works slightly better because sometimes you get this massive 1 minute candle that you get in like a little bit too late. So one of them here, we close above it, we close below it, didn't really get any entry. So the 15 minutes ends here. So you sweep your, you mark your 15 minute, and then as soon as you close above it again, or create some sort of inverse rally gap, you can get it right here, and then you can target this area, or you can target this internal, or you can target all the way up here, but somewhere in between here. I'm a big fan of taking 1 to 2s, 1 to 1s, especially if you trade prop firms. If you trade a cash account, then it's a different story. And that's that. Let's say you have your POI marked here. So you have 2 entries. You have 1 entry down here and also another entry here. Close above it, you get in here, and then you target somewhere in this area, or target 1 to 1 or 1 to 2. Hopefully that was helpful. I don't want to yap around the same subject over and over again. But yeah, that's that. That's how I think. Because when you see this like choppiness, marking out a certain liquidity sweep, paying attention to the overall higher time frame, that helps out. That's how I understand it. That's how I see it. That's how it became clear for me. Hopefully it becomes clear for you guys as well. And yeah, if you haven't joined the community, we have a lot of members. We have over 700 members. A lot of people are winning. There's a lot of winning trades. People are just posting their wins and losses and memes and whatnot. We're still getting a lot of requests. Just join in. Let me know what you think. If you have any question, you already know what to do. subscribe, like, comment, all that good stuff. And for those of you who stick around until the end, so this is what I was gonna go over. I'm opening a small capped group for a direct mentorship. We'll go deep on execution, risk management, passing funded challenges, and overall working on consistently. And most importantly, I can get on the call with you one on one, and I can analyze your level of understanding and tailor what I'm gonna teach to you. If you have problem marking the chart or trade management or psychology or overall just consistency, passing fun challenges, rules, because not everybody has the same issues. Everybody is slightly different. Because when I got into it, I kept buying like random courses and I kept watching these videos, but there was nobody that would hop on the call with me one on one and answer my question. And you would have some sort of way of communication with me one on one, so you don't feel like you just bought a random course and you just watch bunch of videos like a junkie and then you do nothing about it. So that way I can be very selective and only take a handful of people because I want to be fully present, review the trades closely, and actually help people get results. There's a private waitlist link down below. If you want to work with me directly, go ahead and fill it out. Uh, oh, you don't even need to fill it out. It's a, uh, it's a, it's a Telegram channel. Yes, it's a waitlist. Yeah, just get on that and just let me know. Let me know when you're ready. That way I can help you guys out. That's pretty much it. Yeah. Join the community, like, subscribe, comment, and join the waitlist. See you guys in the next one.